At Bardoc Gold, we're focused on delivering Australia's next 100,000 ounce plus per annum producer. We've got a PFS that was released last year, got 135,000 ounces per ounce annualised production at all-in sustaining costs about $12.20 an ounce. Our DFS is on track now for March of this year, and we still think there's a lot of room to be able to grow our current reserve as well as our current resource within our tenement package. So we're an advanced gold project in a tier 1 mining location. So 40 kilometres north of Kalgoorlie, there's probably no better place in the world to build a gold mine. Our PFS highlighted a project that was going to produce around 2 million tonnes per year through a CIL and flotation plant over about a 7.8 year mine life. We expect to see some increases in that as part of the definitive feasibility study that we're working on now. And our expectation is we'll try to convert the majority of that 1 million ounce production target into reserves as part of the definitive feasibility study. We've got strong margins at the project at $12.20 an ounce. And when you look at the current spot price, even at Australian dollars, $2,300, $2,400 an ounce, there's significant margins to be made at the project. Our DFS is on track now, and we're going to have financing construction. In our opinion, we'll be able to sort that by sort of the July period of this year, and we'll be able to focus on commencing construction in Q3. We've also just signed off a concentrate offtake agreement for con offtake, which really does de-risk the project significantly. And we have seen a re-rating in the share price on the back of that. So while most other gold companies have struggled with the drop in gold price over the last few months, Bardoc has seen an increase on the back of that concentrate offtake agreement, where we have seen the fact that we have de-risked the project significantly, because the concentrate offtake will account for around 50% of our total gold production. We've got strong support from our key institutions who participated in a raise back in last July, and they've been supporting the company and now look to support us into a major construction equity build later this year. The board and management team's led up by the group from Pilbara Minerals, and they've got the experience in building mines in the past. Ryan Johnson's a mining engineer with plenty of mining experience to back us up, but the executive team's where we've really built our strength. We've got a team with Kalgoorlie operational experience across mining, metallurgy, geology, and environmental science. And I think we've got all the key ingredients here to really make a successful project at Bardoc. 2020 was a big year. We released our pre-feasibility study in the midst of the COVID pandemic. And then we raised $24 million on the back of that as part of an institutional capital raise. We knew we had a good project from a debt financing perspective, but we didn't have the right people on the register to finance the project through into construction. The welcoming of some major institutions onto the register have now given us the confidence to be able to push forward and develop the project and get it into construction in the latter part of this year. We've re-optimised the mine plan, and we've upgraded the resource to underpin the DFS, and we've made the key management appointments to make the project successful. We've signed off the concentrate offtake agreement, which really does highlight the benefits of the project, and with the calibre of offtake partner we've got, it's been a fantastic achievement for the company. Our DFS is on track for the end of March this year, and environmental permitting shouldn't be too far behind. And there's no better place to build a gold mine than Kalgoorlie. 40 kilometres north, we're close to road, rail, power and infrastructure. And until 2018, these are a series of unconsolidated projects. And it took the ex-team of Pilbara Minerals with Neil and John to come around and focus on the projects and look to really start establishing this as going to be the next gold development story in the goldfields. The merger between Spitfire Materials and Aphrodite Gold, and then again with Excelsior, gave the company around 2.5 million ounces of resource. We've then expanded it out and expanded that resource out to over 3 million ounces and made some low-cost complementary acquisitions that have really given us huge exploration upside, as we've seen with North Kanana in recent weeks. The project itself is an 8-year mine life based on the current reserve, which is 790,000 ounces, against a total production of about 1 million ounces. So there's a significant amount of indicated material already in that mine plan. It's a high confidence mine plan, and we believe that we'll easily be able to achieve around about 65% debt equity split for the project. So we're focusing on that now. We've already had initial discussions with banks, and we'll start going out closer to the DFS for the final financing for the project. It's a straightforward processing flow sheet, standard SAG ball mill configuration with CIL tanks for our free milling ore and a flotation circuit for the sulphide ore. The flotation circuit, it is a significantly de-risked process. There's no as much of your metallurgical risk that goes along with some of your other processes like your Albion processes or your Biox process or the like. And the concentrate offtake terms that we have with our trading partner MRI have really put us in a position where 92% total gold recovered from every ounce mined in Aphrodite is very similar to what you get in a free milling style operation. And the operating costs are fairly similar as well. So we've got a great deal here, and MRI are a really fantastic partner who have the experience of handling concentrate offtake deals in Western Australia. They currently look after Silver Lake Resources Deflector Gold Mine with their copper gold offtake arrangement. They've got the Sandfire Resources copper offtake arrangement, and they also do work for Newmont at Boddington, and in the past they've worked with KCGM. They've operated just at about any port in Western Australia, and they're a fantastic partner to be able to bring the project into production with. And even though the gold price has come off from the highs of the mid last year, around $2,700-$2,800 an ounce, this project, even at $2,300-$2,400 an ounce, is going to generate in the vicinity of about $100 million free cash flow a year on average. It is a fantastic project, and it does present significant upside when the gold price will begin to rise again, as we all expect. The open pit mining, we've got about 420,000 ounces, and we'll see an increase on this mining reserve as part of the DFS study. We've got a lot of upside at the Zoroastrian area, as well as the Aphrodite area as well. We've drilled those out over the last few months, and now all form part of the definitive feasibility study. At underground mining, there's a lot of upside too, because at Aphrodite, it's got a big reserve already, 290,000 ounces, but it all focuses on the alpha and phi lodes. And when we've got Omega, Delta, Sigma, as well as Epsilon as exploration opportunities here at Aphrodite, I've got no doubt that we'll be mining on 5 to 6 years mine life at the moment. At the end of that 5 to 6 years, we'll be mining there for another 5 to 10 at least. At Zoroastrian, we've got a modest reserve, about 80,000 ounces at present. We expect to increase that to over 100,000 ounces as part of definitive feasibility study. And when we have a look, it's still open at depth. There's a multiple lode system, and there's a lot of opportunities even to the north of the open pit, where we've had some exceptional drill holes over the last 6 months. And since we released the pre-feasibility study, we've just built a timeline that we believed was achievable, and we've been setting about meeting all our key milestones, and we have. The resource update was complete in September. We also had the offtake arrangement signed off in December, and now we're focusing on the definitive feasibility study in March. We don't see any major issues in and around environmental permitting, and then we'll focus on the financing aspect. And as I said, we expect to have that complete by around July of this year. We'll then focus on the construction build for the project. That'll be looking around an August, September start date with the final investment decision. And then it'll be a 12-month construction build before our first gold pour. Now, North Kanowna Star, it was a bit of a staggered release because of the way the assays come back from their labs, and I can probably say the same with every other junior explorer, that it's been a tough time over the last few months in assay turnarounds. But the project itself is really starting to come together. We've got over 3.5 kilometres now of a mineralised trend here, and the Serengeti project is really starting to show legs. Here we have some significant interceptions, and it's only at the top of the oxidised zone. We still haven't tested a fresh rock component here. We've got some big, broad, high-grade results that we'll look to test at depth with RC drilling in the coming weeks. So we're just clearing the lines for that now with the loaders, and we expect to wheel that RC rig in there. And we believe, if you look at these sections, there's probably about 350 metres between those sections. So if you consider the main Aphrodite project Most of the ore's contained within about a 500 to 600 metre strike. There's significant upside here at North Kanowna Star. Zoroastrian, we've had some high-grade results at the northern end of the open pit, and when you consider post-DFS, we'll have over 100,000 ounces in reserve on the southern end of this high-grade shoot. We've defined a new northern plunging high-grade shoot here at the very northern end of the project. There's probably going to be around 30 to 40,000 ounces in the open pit here in the DFS, and then we'll focus on the down dip extensions where we've had some really spectacular grades that do highlight underground potential here as well. So again, Zoroastrian will continue to provide well past its proposed mine life. So to wrap it all up, we've got a strategic land holding in what is a fantastic jurisdiction in Kalgoorlie. We've got a large and growing resource base with 3 million ounces, and we'll look to expand upon that with both greenfields and brownfields opportunities. 800,000 ounces of mining reserve, and we'll look to push that to close to 1 million ounces as part of definitive feasibility study. And we should have strong news flow because we are exploring now. We've got 4 rigs on site drilling away. We'll continue to drill along the Bardoc tectonic zone and North Kanowna Star and the like, and then we'll have our definitive feasibility study at the end of March of this year. We're one of the only developers coming on market that's going to produce over 100,000 ounces per annum annually, but once you consider a brief ramp-up phase, we're going to have about 150,000 ounces per annum annualised production. So it is a significant project, and we've got a strong board and team to be able to execute it in its entirety. You know, we've got all the experience across the management across mining, metallurgy, environmental, and geology as well. And when we look at the board, they've got the experience in getting projects funded and getting projects into production. So it's a fantastic project at Bardoc, and I only see the upside from here. Thank you very much.
Thanks, Rob. One viewer has asked us, have you ordered any long lead items for the project?
Not at present. We haven't started focusing on any of the long lead items. We're putting together our scope of works for our EPC contractors, and that should be out in the coming months.
Right. And another question we have is the DFS that's imminent. What can we expect in terms of timing, resource, reserve updates, project funding? Will they be announced close together, or will they be spaced out?
Yeah, so we're going to focus on completing our DFS by the end of March, and that should form a reserve update in line with that DFS timetable. So they'll come alongside together, I'd say.
Okay, thanks.
In terms of the financing component, we're still working pretty hard towards that. Post DFS, we'll start engaging again with the banks, and then we'll have a look at that final investment decision around Q3 this year.
And what sort of cash flows could we expect?
As I said, the project at sort of $2,300-$2,400 an ounce, the annualised cash flows is about $100 million. And when you consider that our market cap at the moment is sitting around 130, with an enterprise value of around sort of 110, 120, there's a lot of upside at Bardoc.
Right. Thanks, Rob.